Hello everyone, welcome to the technical analysis webinar with AvaTrade. My name is Troy, I'll be presenting. Before we get going, let's do a quick systems check. If you would, type OK in the chat box if you're hearing me clearly and seeing my screen all right. Just waiting on a few more responses to make sure everybody's up and running fine. If you would, type OK in the chat box if you're hearing me clearly and seeing my screen all right. Okay, great. Looks like we're up and running fine. Thank you very much. As we get going, a couple things to keep in mind. One is, as always, there's no guarantee of profits with any one trade that you take. Each and every trade has risk. The other side of that is each and every trade has good potential for profits as well, which is why we're all here. So we'll go over in a moment some ideas with our technical analysis for how to go after those nice potential profits. Hopefully it will help you out with improving your trading strategies in one way or another. There are some unique ways you can manage risk with AvaTrade. One would be by using our Ava Protect feature, which is available on our web trader platform and our award-winning mobile app, AvaTrade Go. Ava Protect is a special feature that allows you to protect against any and all losses during defined periods of time for a small premium cost. So that's something you can check out on our web trader platform and our AvaTrade Go mobile app, which both will trade right on top of your MT4 and MT5 accounts. Also, keep in mind that what we go over is not meant to be financial advisement, but is coming from an educational perspective. Now, real quick, what is technical analysis before we get on the live charts? It's basically looking at the historical movements, the price movements of an instrument on a chart like a candlestick chart. Okay, a candlestick chart's a type of chart that traders tend to use for analyzing price movements. So in general, you're looking back at the chart, looking for repetitive patterns, looking for trends, looking for movements that in the past maybe lend to it some predictability for future movements. And so many times we can, through manual methods, draw lines on the chart that represent what we might call lines of resistance or lines of support or trend lines, etc. And these price levels and lines can help us maybe predict what we think will more likely than not happen moving forward. It's not perfect, obviously, but it can be very helpful to use this type of technical analysis to help you decide maybe opportunistic entry points and exit points for your trading. Now, you can also use indicators that can help you with the technical analysis. RSIs, stochastic indicators, Bollinger Bands, etc. Literally, there are hundreds and hundreds of indicators you could use, but they're all basically doing the same thing that we're about to do manually, which is the indicators look back at the historical movements on the charts and through some programming try and tell you what the indicator thinks will happen next. And so I think it's probably best to understand these movements and these methods manually first, and then use indicators as a supportive mechanism to see if they agree with you and that you agree with them. If you have any questions or input that you want to give as we go along, please do so in the chat box. So first, I always like to start out, even if we're focusing on technical analysis, I like to start out with the main fundamental news headlines so we get an idea of which way the wind is blowing, so to speak, in the markets. Get an idea of the sentiment is another way to say it. So real quick, we'll look at some fundamental news that has come in. We can see on the economic calendar today that there's been a slew of good news out of the European Union. Okay, better than expected business climate, better than expected current assessment, better than expected business expectations, better than expected GDP numbers, better than expected PPI numbers out of South Africa, etc. Okay, so not just the European Union, but we're going into South Africa. We've got Great Britain with some announcements coming, the US with announcements coming later today. So in general, what have we seen in the past weeks with the announcements? We've seen better than expected data economically. Okay, and so while that's great and that's caused the stock market to go flying up, it also leads to some concerns that maybe there's too much inflation. Maybe things are going too well. And you look and you say, well, why would things be doing so well coming out of this horrible pandemic? And the answer is easy money, right? Banks around the world have had their interest rates at 0 or even lower. Yes, there is such thing as negative interest rates, which encourages people not to save but to spend. All of these are inflationary tactics to keep the economy going, but at the same time, too much inflation is not necessarily good. So we want enough inflation, but not too much. And that's the balancing act that central banks have been doing all around the world. And so, in the US, they're talking about maybe cutting back on the bond buying program that the federal government has been doing that's been helping to prop up the economy. But at the same time, they're talking about more infrastructure stimulus. So it's, tug of war back and forth with ideas of, are we going to cut stimulus soon because there's too much inflation maybe, or are we going to have more stimulus for infrastructure? So it's kind of a mess, and investors are feeling that right now. And so, hence we see the markets closed in the red yesterday, but they're in the green in the futures today, right? So investors really don't necessarily know what to think right now with all this great economic data coming out, but fear that there's maybe too much inflation and that all the supportive mechanisms with low interest rates and bond buying programs and stimulus being handed out, maybe those will be scaled back, which scares the heck out of Wall Street. Now, German business morale shakes off coronavirus crisis to hit 2.5-year high. We just talked about that. The business climate, the business morale at highs. Biden to meet with bipartisan senators to discuss infrastructure plan. I just alluded to that. Okay, there are fears of inflation, and at the same time, Biden's about to talk about more stimulus, which then causes more potential inflation, right? So there's a cycle here where, all this fear could drive a commodity like gold up. It's been driving oil up. The weakening of the USD and all of this inflation that's been happening, it's driving up the price of oil. And so we see everything happening, coming to fruition. And then we start to think about, what about the Feds? And by the Fed, we mean the people in the US making monetary decisions. There are mixed messages about inflation. It's like I said, it's making Wall Street nervous. It's unsettling investors. And what I mean is, the FOMC committee in the US said, maybe we'll scale back the bond buying program sooner than we thought. Maybe we'll raise interest rates sooner than we thought. And so Wall Street says, oh, and you see a sell-off, right? A little bit. And because the easy money might be going away soon. But at the same time, then you see talk like the last headline I showed you about more infrastructure, more spending, more stimulus. And so investors are a little confused because there are some mixed messages here about what really is going to happen in the next months moving forward in terms of monetary policy. And in general, what happens when there's indecision, when investors aren't sure what's going to happen, what are the safe havens many times that investors can run to? Maybe gold, maybe bonds, government bonds. And so we might keep an eye on bond prices. We might keep an eye, on what's gold doing. And that can give you some clue as to what might the stock market do, right? Okay, just some things to keep in mind about the current business climate, about the current sentiment in terms of monetary policy and investment policy around the world. A bit of nervousness, a bit of confusion, some fear about inflation, but also talk about more stimulus that Wall Street just loves. Okay, so I mentioned AvaProtect as a feature for helping with your risk management. Real quick, if you go to trading platforms on our main website, AvaTrade Go is here. You can put that on your mobile device, AvaTrade Go, and you'll see the AvaProtect feature is available on gold, silver, and FX pairings. Moving forward, maybe more instruments. But for now, gold, silver, and FX pairings. But even if you're not using AvaProtect, the other risk management features are great as well, because as you put your take profit and your stop loss marks, it calculates like a trade calculator. It calculates in the order window how much are you risking to your stop loss with whatever trade size you picked. It tells you how much you'll make to your take profit with whatever trade size you put. So before you ever buy or sell, you can be more fully informed as to your risk, your potential profit, etc. So very cool features both on our mobile app and on our web trader platform. The web trader can be accessed simply by logging in from our main website, which takes you to a platform that looks like this. And I encourage you, use this platform, get familiar with it. It has a lot of nice features that can really help you out. Something that relates to our topic today, technical analysis. If you go to the tab here, go to Trading Central. We have some premium features available through Trading Central for free. If you go to analyst views, you have free signals. You might not have known, but AvaTrade's giving you free signals through Trading Central. And you see it, you get a breakdown of the technical analysis. What direction is the breakout move maybe expected? Where are the lines of support and resistance? Where should you get in, get out of the trade, etc. It's all broken down for you with the full signal and price levels for each instrument. And those of you that are into crypto, there are signals for cryptocurrencies as well. Okay, there they are. So very, very nice feature, free of charge on all live accounts. And I think even available on demo accounts now moving forward. All right, so let's jump on the MT4 platform. Let's take a look at the technical analysis of some instruments that might seem predictable based on the fundamental news as we know it. Paul, you're asking, is it advisable to hold CFDs overnight long term? There are interest charges involved with CFD trading. So by CFD, we're talking about any of the instruments that you're trading with any retail broker. Okay, they're all contracts for difference. Meaning, if you're trading on an instrument, you're not actually owning the instrument. It's like you're entering into a contract for difference. When you close, the difference in price determines the profit and loss. Okay, and so as you hold those positions overnight, there's an interest charge. We do not charge commission to open and close trades. We have some of the tightest spreads in the industry, and the only other charge then that you would have is overnight interest, which is the same sort of structure that most all brokers have, right? Overnight interest. So the idea is when you're trading with leverage, you're basically borrowing money, right? You're opening a position with only a small amount of it being your money that you're putting up in the margin to open the trade. And so the rest of it is traded on quote unquote borrowed money, right? Leveraged money. And so there's interest for that benefit of being able to trade on funds that really aren't yours. There's interest involved when you hold those trades overnight. And so you can find those interest charges very easy, and I promise you they're very small. Go to our main website, go to Trading Info, go to Financial Instruments, and you see the spreads, the leverages, everything listed here. If I want to know, well, what's the interest I'll pay on Euro USD? Well, you'll be happy to find that if you're selling Euro USD, we're paying you interest, you see. Positive 0.0031%. You get paid interest to sell on Euro USD right now. I think probably because the larger market expects it to rise. So they're trying to encourage you to sell on something that will probably rise. So they'll pay you to sell on Euro USD right now. Okay, by they, I mean the market. If you're buying on Euro USD, you're paying interest. negative interest rate, 0.0064. Okay, but you see it's a very small interest rate either way. We're talking 0.00 something percent. Okay, so very small interest rate, but you know, this style of trading usually is not a type of trading where you should hold trades for months and years, right? Maybe weeks, maybe sometimes into months you're holding trades. But if you're holding trades for years at a time, you're probably better if you're trading gold to buy some physical gold. So you're not paying interest on a position for years, right? So the CFD style trading is more for entering and exiting, right? Within a reasonable amount of time, and maybe you pay a very small interest for that trade, right? But again, holding for years at a time, probably not the place to do that when you're doing CFD trading, okay? The style of trading we do on our platform is more conducive to getting in and out, even within the same day or within weeks of time, maybe months of time sometimes. Okay, depending what instrument you're trading, etc. But by all means, you can hold your trades as long as you want. I don't mean to say you can't. If you find that it's beneficial to hold your trades for a year or more, by all means, you can go ahead and do that. Okay, so right now I'm looking at Bitcoin. I don't know if anyone who's attending the webinar today is understanding what might have happened with Bitcoin recently, but it took a crash. And you know, let's do this. I think today we're going to spend some time on the WebTrader platform to analyze some charts. Why not? So if we want to take a look at what Bitcoin did and the technicals on it, let me go to full screen here. And let's get to Bitcoin first, then we'll go to full screen. Okay, we've got Bitcoin USD maybe is the one we'll do. And let's go to full screen. And by the way, if you don't have the WebTrader platform on your account, because maybe you were with us years ago and the old accounts don't have the WebTrader automatically on them, just ask your account manager or our support team and they can have it added to your login from our main website, because it really is a nice platform. So let's get some perspective. Let's go to like 2-hour candles and look at Bitcoin. Okay, and I'm scrolling back a bit. Look at that drop. Okay, and if we go to 4-hour candles, we'll get more perspective. It's an even larger drop than you might be thinking. Why? Anyone know why did Bitcoin take this big drop? First of all, let's try and find an answer fundamentally. Why did Bitcoin crash down so much? And for that matter, a lot of the cryptocurrencies. Yeah, China. China cracked down on mining companies, and not just that, it went beyond a crackdown on mining now. They also basically are dictating potentially policy to the banks not to accept any type of exchanges or not to provide any services or transaction ability for the whole industry. Okay, and so it really had an effect, created some fear on the crypto market, and you saw a big drop. Now, what we can see is if we look at this line here, okay, this was a support level here around 30,000, 31,000. It was a line of support where it bounced up and then came back down, right? We see it broke that temporarily. You see the wick? It broke below 30, went down around 28,000, then came right back up, okay? So it tested the waters of breaking 30,000, broke below it. You know, the next major support's not till 20,000. The next major support's not till 20,000, which used to be the old resistance. If you remember a long while back, Bitcoin had reached 20,000 and then plunged. And then it took a long time to get back up to 20. And then once it broke 20, it flew up to 60 plus. Okay, so 20 seems to be like somewhat of a magic number. And if we go and we look at larger candles, let's go to 1 week candles and scroll back a bit. Okay, we see that right here. Okay, that as we're looking at this movement, we can see over this direction. Let's draw another line. 20,000 is right here, approximately. Okay, and so we see this climb. This was resistance for weeks, resistance, resistance, resistance. And if we went back further in time, we'll see that was an old resistance from back years back. And then it comes and it creates resistance again, and boom, look at the size of that 1 week candle compared to the others. It went, once it broke above that resistance, up it went. Okay, so now look at the amount of momentum on the way down. It's potentially possible Bitcoin could come down and try and test 20,000 down here. I'm not saying it has to do that. Maybe it goes back up to 60, right? But the history is there on the charts that once it broke below this 30,000 line, okay, you see 30,000. Here's the recent dip below 30,000, this wick right here. It looks like it could have a clear path down to 20. If it breaks below 30 again, let's say this week, right? Or next week. So that's something to keep your eye on with Bitcoin is it going to break back below 30? And if so, maybe you could have a pending order below 30, a sell stop potentially, to see if you could take advantage of a potential further plunge from 30 towards 20, right? Those of you that are bullish on it and you're buying on Bitcoin, then it might make sense to have your stop loss below that 30 mark, because that seems to be a price that if it breaks below, there could be a further plunge coming. So it could be where you might have a stop loss set up. But very interesting movements on the cryptos of late. And so if we go to the smaller candles now, like 2-hour candles, we start to look and say, okay, it's forming a bit of a resistance. Let's draw another line right about there. Okay, support and resistance in this area. So this was an old support, broke below. It seems to be a spot where it's snaking above and below this price around 33, 34,000. It's something to keep an eye on. Now, we can pull up some other instruments that were affected by the same news, because it wasn't just Bitcoin, right? So we could take a look at something like maybe Ripple. Okay, XRP. So if we look at this chart, we can see something similar. On the small candles, and let's get off the 1 minute, maybe 30 minute, we see there was a big plunge, okay, here. Here's the big drop with the news out of China, then the bounce, and then the resistance, okay? Then the resistance right here, okay? This was the big plunge. This was support down here, support, support, a double tap down here around 50 and back up. And then we see a triple tap up here on the resistance. 1, 2, 3, and it seems to have resistance here. So if I'm looking at Ripple right now, I'm considering the fact that that news hasn't changed yet out of China, right? Still talking about really being against this whole industry now. And China was a big area for mining these different coins. So maybe if I'm looking to trade on something like this, maybe I'm putting my stop loss, and let's just do a simulation here. If I wanted to sell on this, you take a trade size that makes sense for your balance, right, and your risk tolerance. You can calculate your risk by putting a stop loss and a take profit. Maybe my stop loss is above this resistance, so at maybe 70 on the coin value would be above this resistance and above the next resistance here. I would get above a couple resistance levels if my stop loss is at 70. Okay, just as an example. So if I put my stop loss here at, let me get rid of some of these numbers. $70, okay? And I look and I say, okay, I'm only risking $114. Tells me my risk. You see, it does the risk management for me. And my potential profit, maybe I think it could drop back down to 50 down here, where it was not that long ago. So my take profit, maybe I say 0.50. When I say 50, I mean 50 cents. Okay, 0.50. And so my potential profit's 285. I'm risking 114. That's nice. Maybe I'm willing to do more. If I adjust my trade size, it adjusts exactly what my potential profit is and what I'm risking. Okay, very simple risk management. We're doing this based on support and resistance levels, the technical analysis, getting my stop loss above this resistance, putting my take profit right down here by the support. And I could draw another line just to say, okay, where's 50? 50's down a little low, isn't it? If I want to take profit just before the support, maybe it's at 52. Okay, so I draw my line and I say, okay, let me adjust this. 52. I still have, 2-to-1 potential profit to risk. So maybe I like that idea and I sell. Okay, just as an example, this is based on the technical analysis and understanding the fundamentals behind what's happening as well. Paul, you can set up alerts through the AvaTrade Go mobile app. It has an alert system. Okay, you can set up price alerts through the AvaTrade Go mobile app. Good question. Okay, so now let's look at something other than cryptocurrencies. We talked about the fears on Wall Street regarding policy moving forward. And so if we want to take a look at Wall Street, what's better than some of the major indices? So if we look at maybe the US Tech 100 or the Dow Jones, let's try let me get the proper name here. There it is, US underscore 2000, US underscore 30. That's the Dow Jones, US 500, US Tech 100. That's NASDAQ, NASDAQ 100. Okay, so now we've got the NASDAQ chart up. And let's expand that and have a look at what's happening. So it's been pushing all-time highs, the NASDAQ and the S&P 500, etc. And so if there's going to be a pullback in the market, it could be a large one. Let's get off the 1-minute candles, maybe 2-hour candles. We see an uptrend, right? Up, 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 all-time highs up here. These are all-time highs we're looking at. And so what do you think could happen to the market that's at all-time highs if all of a sudden there's fears of inflation and the monetary policy in the US, European Union, etc., starts to say, okay, there's too much inflation, we need to pull back on stimulus? What do you think happens to something like the US Tech 100 that's at an all-time high if there's fears that inflation is too high and that stimulus could be pulled back? Mark, good question. Depends on your intentions, right? Are you looking at 1-minute candles or 1-day candles with your technical analysis? And the answer is, are you looking to scalp a profit for just a few points movement, or are you looking to be in the trade for days and weeks? So that really answers that question. But at the same time, it's also helpful to look at both, because if there's a resistance level on the 5-minute candles and then you look and you say, wow, it's the same resistance level on the 1-day candles, now all of a sudden that resistance level has more respect because it's been there longer than just 5-minute candles. But that creates some agreement between the different levels of candles, then that becomes more powerful of a price level. Okay, so in general, when an instrument's at an all-time high and then fear hits the market, you could see it drop, something like the US Tech 100. So let's look at 1-day candles maybe. And we see, indeed, it's an all-time high. These were the highs back here, and it's way, way, way up. Okay, so the question is, how high could it go? And when could there be a pullback if you're looking to short this instrument? Well, there are some big announcements coming today out of the US. If those numbers create more inflation fears, you could see a strong pullback in the market. There's no guarantee, but it's all about opportunity, right? So if we want to go to, say, 5-minute candles, we could say, all right, on the 5-minute candles, I see a resistance level has formed here in this general area. Okay, so if I'm looking to short the NASDAQ right now as a scalp, right, to try and take advantage of some fears that could be in the market right now, then I don't have to risk much to get my stop loss above the all-time high and go after a much larger potential profit. So if I'm looking to, let's say, short the NASDAQ, we saw that, there in the headlines we looked at, there are some mixed signals out there about what's the monetary policy going to be. So, I put a trade size that makes sense to me, first of all. And then once I have a trade size that I think makes sense, then I look, execute when price hits. That would be a pending order. Or I could just do a move that's a market move. And if I do that, then I can put my stop loss above the all-time high, which might be 14,400, something like that. Let's see here. I apologize if you're hearing a high-pitched noise. There's some kind of alarm going off near me. I don't think it's something to worry about. Okay, stop loss. $14,400. Okay, is what I'm aiming to do here. And there it is. So I would risk 106. Maybe that's acceptable to me. If not, I adjust my trade size to the amount I'm really willing to risk, right? And then take profit. Maybe I look and I say, if there is fear, it could give back this huge surge up. It went up fast, it could come down fast. So maybe just before the bottom of this large breakthrough candle, this was resistance here. If I draw a line, this was resistance, and then a breakthrough. So if it comes back down just before this old resistance, which should be support now, 14,325, let's say. That could be a spot that you could go after a profit. And I've got my take profit, I think, too far away. Let's say 360. Okay, potential profit 40, risking 28. Maybe I increase my trade size. I want a larger potential profit. Okay, potential profit 100, risking 72. If I like that risk, that setup, then away I go. Okay, there's my trade. And I'm just above the resistance with my stop loss. I'm just before the support level with my take profit, with a little better potential profit than risk, and going in a direction that fundamentally maybe makes sense right now, that we might get some ranging between the all-time high and the first support level down because of the mixed signals that are on the market right now. Okay, let's take a look at another instrument. What about crude oil? Oop, I have to first spell crude oil correctly. Crude oil, there we are. Let's look at the full size chart here on crude oil. And you say, wow, look, crude oil's plunging. That's a 1 minute candle chart. Let's look at 2 hours. And you say, oh, wow, crude oil's going up. You see the perspective? You were asking about which candles should you look at to determine price levels. Look at all of them, as many as possible, right? Because on the 1 minute candles, we saw a downtrend. On the 2 hour candles, we see it's a much larger uptrend with a small pullback, okay? The mixed signals on the market are causing the pullback in oil prices. But now there's a support level here. You see old resistance here, resistance, drop. Once you break through this resistance, now it becomes, look here, support, 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 support. So oil prices have pulled down from being up above 74, 75 to the current price 73-ish. And they're on a support level now. So let's go bigger candles, say 4 hour. Okay. We see again, the resistance level becomes support. Okay. Let's go 1 day. Same thing, huge uptrend, resistance, breakthrough becomes the current support level right here. Old resistance, current support. So I don't have to risk much if I'm going to buy on crude oil because the economies have been doing way better than expected with higher inflation than expected. That's what's been driving crude oil up, right? Maybe those announcements that are coming today that we looked at on the economic calendar, some big ones out of the US and some others, if they're better than expected, as has been the trend, you could see oil come flying back up off this support level. If the numbers are worse than expected and don't show the inflation, maybe you see the US dollar strengthen and oil break the support. Okay, so the potential for a large move is there today. So what kind of price levels for buying, selling make sense then? And what you might look at then is to say, if I'm going to buy off this support level, which has been confirmed once, twice, and now bouncing a third time potentially off of it, then maybe I go to crude oil. I look at a buy position as an example, and I put my stop loss just below this price level here, so 72.97, so maybe 72.5. $72.5 on the stop loss. Take profit. Maybe I'm looking at something like 75 because we already saw it hit that high, right? Not that long ago. So my potential profit is more than triple what I'm risking. 95 potential profit, risking 30. Maybe I want to do more than that. As I change my trade size, I see, okay, potential profit 190, risk 60. If I'm happy with that, there I go. I'm in on a move. I'm trading up off of a nice support level. I'm not risking much. My stop loss is just about, a small bit below the support level, and my potential profit is much larger than what I'm risking. Okay? All makes sense from a technical analysis standpoint, and we're trying to make sense out of it fundamentally as well to back up our technical move. And so, with these moves we've set up, if you win 1 out of 3, you might still make a profit because the potential profit's larger than the risk on each of these. If you win 2 out of 3, you're probably looking very, very good, right? 50-50 a lot of times is good trading. You can make a nice profit that way, depending on the distance to your stop loss compared to the potential profit. If the technical analysis is done that you're trading in an advantageous way, many times you can have a better potential profit than risk. It's not the only way to trade. Sometimes you're better off to have your stop loss further away than your take profit. Then you're more likely to hit the take profit, right? But the way we're setting up here, 50-50 trading, nice profits. You can make very nice profits. Okay. Any questions? I'll pause for a moment here and see if we have any questions, any input before we call it quits here for the session. Okay, I don't see any questions popping up, but I think what we're going to see, I do see a question popped up or a suggestion. The suggestion is, could we put a sell position down here? Whoops. Let me get rid of that line. That didn't go the way I wanted. Could you put a sell stop down here? That if it breaks the support, then sell on oil, meaning that's confirmation of a downtrend if it breaks the support level. And so if it breaks the support level, many times what you see is a plunge. So at the same time you're buying on crude oil, right? You could also set up a pending order right down here that if it breaks the support, sell on crude oil. Absolutely. And so you can do both at the same time. Preparing for what if the news today is bad for oil prices? If the news today causes the US dollar to strengthen, then you could have a pending order right down here. If it breaks the support, boom, you're selling. And you could unexpectedly make profit in the opposite direction of your market move. Good point. Absolutely, that's something that would make sense to potentially set up. US 30 was requested. We'll look at that real quick. We already looked at the US Tech 100, the NASDAQ. I believe the US 30 will set up very similar as the other major US indices. So here's the US 30. If we look at the chart, it looks very much the same. Let's go to 2-hour candles. We see a lot of climbing on the US 30. It's not at all-time highs like the NASDAQ, but it's been climbing over the past days. We see the pullback when the fear hit the market about what the FOMC committee was saying about maybe cutting back on the bond buying program. Well, then, okay, down went the US 30 a bit. Here's the bounce back up. I see a resistance level on the US 30 here. Okay, this was an old support level. Support, support. Fear hit the market and it breaks the support. You see here it became resistance with this wick, resistance, and down. Now it came back up, resistance, resistance, and testing that resistance right now. So, if you're looking to short this, if you're looking to short thinking that there's fear on the market, then you do have a nice resistance level right here on the US 30. So selling on this and putting your stop loss just above this resistance level gives you a limited risk and a much larger potential profit if it pulls back down to recent lows down here. So I can risk about 1/10 of my potential profit down to this level down here that it was at not that long ago. So to simulate that move, US 30, sell. Okay, stop loss just above this level would be like 34, 100. $34 and 100 for the stop loss. Take profit could be down here where it was already down not that long ago. It's say 33,200. Okay, my potential profit much larger than what I'm risking. And my take profit is before the first major support level, and my stop loss is past this major resistance level. Okay, so Then I just have to determine how much do I want to risk. Possible loss 155. Maybe I think that's too much, so maybe I lower it and say my possible loss 77, my possible gain over 300. If I like that, then there I go. My trade is activated. I've got my stop loss above the resistance, risking a limited amount, and my take profit just before the support down here with a much larger potential profit than what I'm risking. Okay, everybody. I think today will be a nice day for either breakthrough moves, breaking through the resistance, or reversals back down. So I'll leave you with the idea that not only with this market sell, I could have a pending order ready to buy right up here. If it breaks the resistance, I could have a buy stop ready to go, ready to buy from a higher point above the resistance. And at the same time, I'm shorting it with a market sell. Okay. And I think you'll see that on a lot of the instruments today, especially the major indices. You have some great potential for market moves backed up with pending orders. And if you win on one of them, you're in overall profit, the way we've been setting up this demonstration. Okay. So take a look, major indices, take a look at the commodities, gold, oil, and some of these cryptocurrencies that I think are poised for some further large movements soon with the fundamental news that's out there. All right, everyone, thank you for joining. Good luck with your trading as you move forward. Bye for now.